Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Cardano's ADA, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now, if you haven't yet joined us in Discord, why not check it out? Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and it's the first place we go to notify you of the ins and the outs of everything that is going on in the crypto space. It can be a little bit complicated to get in there. We have tight security, but if you go through the verification process, follow the guides, you should verified, and then you'll have access to what I think is probably one of the best Discord servers for crypto out there. And in this video, guys, I'm going to be talking about Elliott wave theory. I'm going to go through the wave counts and all that kind of stuff. If any of this feels alien to you, there we do have a video course on Elliott wave theory that will basically walk you through what to expect with Elliott wave theory, how to understand it, how to read it, how to trade it, all the wonderful stuff. Theory. So do check that out if you want to get a deeper understanding as to what is going on here when it comes to Elliott wave. Okay, let's make a start. Cardano paired up with USDT on the hourly chart, and Binance is our data source. Now, I have this one particularly drawn out. It is of interest to me. But there are a couple of other ways of looking at it, right? Because essentially what I've got going on here is this kind of 1, 2, 3. Down here is 4, up here is 5, so this would be 3, this would be 4, and then that would be 5 going down deeper. It's possible that that is 3, and this is 4, and we've already completed the 5th down here. Okay, so that's also a possible scenario. Okay, so I want to kind of just say that that's something that we should acknowledge, that this is just one out of a couple of different possibilities and that I'm going to go through today. I think this is the one that I'm expecting to happen, just based on a few things that are going on outside of the price chart. Okay, so this is kind of what I think is likely to occur. But I could be off pace here and we could actually be moving on up. So just kind of be really cautious about that. If we do, you know, a couple of things, then obviously we'll be looking for much higher prices, and talking about maybe going up into the 30-cent range, specifically this bigger yellow box area here before any further move to the downside. Now, these are all short-term movements, where we are still talking about 22-cent being a nice Y level low point on a macro scale, and potentially even dropping down lower than that towards 15-cent at some point in the future as a possibility. Okay, but this does seem like an obvious area where we are right now, hovering around here. Anything kind of lower than 30-cent. And I mean, less than 25 is like golden, really, as a good opportunity to kind of be dollar cost averaging, in my opinion. But let's go ahead and jump down into what I've got mapped out here at the moment, okay, as to what's going on. Now, the reasoning I think we've in this kind of fourth wave, potentially a 27-cent high point, is that we do have a interesting count over here. We can kind of go 1, 2, 3, 4, and 5 like this. And I think we'll be doing something very similar over this end. So I think we're going to go something like this, 2, 3, 4, and 5 like that. And in the middle, it's a simple kind of just A, B, C structure like so. Okay, so all in all, this entire thing is known as a zigzag, A, B, and C. Now, for us to kind of move out of this kind of bigger move and bigger area altogether, then we need to see something move significantly higher. So let's go ahead and just take in our current positions. Okay, so I'm going to take this right here. Let me just check to see where this, yeah, right there. Okay, move this over to our existing low right here. And you can see that actually I should lift my target just ever so slightly to 27.27, okay, right up here. This will basically given us our 1-to-1 ratio. Now, I'm going to put a little dashed line right up here as well. Okay, this is 28.45. 28.45 would be our 1.618 area, and that would tell us that we're actually going significantly higher, and we'll be going into more of a 5-wave structure to the upside. So that would be where we would kind of consider that. Anything lower than that, it's still corrective, and I don't have to get too excited, or we shouldn't get too excited. So essentially here, it looks like we have this fourth wave movement right up into our 38.2% retracement level. Okay, at 27.27, slightly higher than our original at 27.19. And then from here we come down, and I would be expecting this to be a 5-wave drop, okay, in line with what our 5th wave expectations are, okay, but there are a lot of different, on the 5th waves, there's lots of different ways that this could go. Okay, so straight off the bat, the easiest one to understand is one that looks like this. It goes down, it reliefs up, and then it goes down massively, reliefs up, and then comes down, and we end up into our little area down here. This is basically between 23.2 and 24.9, 24.09. Okay, that's kind of the option one. Option two is you end up with a really deep wave one, some kind of wave two movement to the upside, a wave three coming down, and then a wave four that overlaps wave one, and then you slightly come down just deeper into that final fifth wave. This is called an ending diagonal structure, okay? And this particular structure would still take us down into our lower fifth wave movement, but will probably be on the higher end of the scale, okay? So there's that as an option as well. Then, of course, we end up with one that is a little rarer to see, but you can see it nonetheless. You end up with something that look like this, okay, and we end up with again some overlap in there, and then a really big wave 5 like this. Now this one might fall short of our target. Shouldn't really. I mean, it might actually just reach that last little point like that. Okay, and these particular ones are a little harder to see. These can be expanding or contracting diagonal structures. So if I draw this on here for a second, and we'll probably have that wave 4 come and test that higher bound there for a second, just for the illustration purposes. And then you have this kind of really kind of expanding out quite a bit like this. So if I pull these down just so that they touch the illustration, you can kind of see how that. So within our fifth wave movement here, there's a couple of things to be expecting, right? It's not necessarily going to go straight down. I mean, that's the simplest way. We would like to see that. But my target doesn't change. No matter what kind of diagonal structure here, we should be ending up somewhere between 23.2 and 24.09. The only question is, you know, the type of five wave structure that actually ends up here. Now, depending on the type, depends on whether you're the higher end of this or the lower end of this, okay? Of course, like I said, we could have been wrong about this, and this actually could have had our fifth wave finish way over here already, and in which case I'm really paying attention to that 28.46 level, because that would be our impulsive trigger point where we can say, yeah, categorically, this is no longer happening. We don't have to worry about that, and instead we can go up into that next section to the upside. So a couple of different options there for Cardano. I do think we're probably going to move down though. If we take a look at the stochastics here, we can see that we're overbought on the 8 and the 4 hour. The hourly is quite high. The daily is actually okay. The weekly is okay. I'm not too fussed about those. Let me get rid of that. In fact, bring up our stochastic here. Let's just check out that daily chart here. So yeah, we've got loads of progression to the upside. I think that's okay. So we could have this last little dip to the downside and then really have a good run to the upside. So there's a lot of things to kind of consider here. Across these kind of larger time frames, that some of them do need to pull back quite a bit. Specifically like the 4 hour, the 8 hour, the 12 hour, the 16 hour, the 20 hour, they all need to drop down. There's downward momentum there. But on the daily, we could see upward momentum along with the weekly. So yeah, it's one of those. I still think we kind of have to come down into this final fifth wave, 23 to 24 cent, and then we can really get a good run to the upside. And I do think it's going to be back up into those 30 cent ranges, even if it is only up there briefly. I do think that is where things are likely to be heading. So I'm going to leave this video right there. If you have found it useful and informative, smash that like button. If you'd like to learn more about Elliott Wave theory, check out 𝗕𝗘𝗪school.com, linked in the description down below. Don't forget to join us down in Discord, guys. It's one of the safest crypto spaces, and it's the first place that we go to notify you of everything that's going on in the space. Guys, until the next one, have a fantastic day.